Welcome everybody to a new analysis of Tradomics focused on US banks. So in this video, we're gonna video analyze 6 prominent US banks by using our T-cycle analysis. Um, Before starting the discussion, I would like to remind you to subscribe to our channel in order to be notified as soon as possible regarding your favorite stocks. And the way we are setting up the channel at the moment is that we're gonna run through different stocks belonging to the corresponding industry or sector they are. So as you have seen already, probably we have issued a video regarding the US tech stocks. Here we have banks, and in the future, really soon, we will be issuing other videos for other stocks in other industry domains. So let's start with BlackRock. We issued in the past an analysis focus on BlackRock, saying that the rally has just begun. That was the title. And we were saying that given the fact that we have had this high swing broken with this candle occurred on the 12th of July 2024, we could have had upward yearly cycle already binded to the upside, because when we gauge a time um, throughout this yearly upward cycle that began in February 2023, we have at 275 bars, which is basically close to the maximum duration of a yearly upward cycle. From this top onwards, we have had evidence that from here we have had a new T plus 5, and we were around this period. And actually, what we were saying is that the trend could have gone just to the upside. And therefore, this is what happened. So now, basically, just to remind and refresh what we were saying, we have arrived at 134 bars, but here we have time to proceed to the uptrend or proceed the rally until the minimum duration of a T plus 5 or a nearly cycle, which is 190 days. So basically, the price of BlackRock can keep the rally at least until the 6th of January 2024. At least, but it can also go beyond, because 190 is the minimum duration, but we can also extend in the best case scenario to 338 days. Okay, so here we have an uptrend that can last until 2025 and even H1 2025. So let's also update the chart here. So regarding the upward cycles, we have had from this top occurred on the 24th of June 2024, another T plus 2 upward cycle of 26 bars. And here we have had a total duration of 98 days. So this was a T plus 4. And now from here onwards, we have, so from the top occurred on the 31st of July 2024, we have had 17 bars below the top. So here we can say that from this top, we have a T plus 3. So in this case, the T plus 3 can last between 48 to 89 days, all of them to the upside. And at the moment, we have reached a total duration of 34 bars, and on this top 21 bars. So here we are about to close a T plus 2. Therefore, we still have time, 10 days to go to the upside, but now be careful, because we can have the beginning of a retracement in order to begin a new T plus 2, like in this case or like in this case. So here, be careful for the uptrend ongoing, because it might have a retracement or a pause. From desktop, we can already say that this is a T plus 5 because we have all the condition for swings and duration. Upward cycle. And in terms of downward cycles, from this T plus 4, we have at the close of this first T plus 3 of this second T plus 4. So here we can put the T plus 3. And if we gauge the duration from this low to this low, we have 24 bars. So here we have a new T plus 2. Okay, so what can we say at the end of the analysis? Well, the tendency for the midterm is definitely on the upside, but we are now at 224 bars for a nearly downward cycle. Therefore, be careful because in the next months, we can see also the closing eventually of this T plus 5. And in order to have a T plus 5, we need a T plus 2 that needs to be negative. So we are in advance in terms of downward cycles compared to the upward cycles. So given that now we have reached also 133 bars, here we have a T plus 3, but also be careful because if we continue going to the upside, then we might have a retracement also to close the T plus 5. Okay, so now we are at the beginning of the T plus 2, so I'm not expecting this that is going to happen in the next week or in the next 2 weeks, but at certain point in time, and also even right now, there is a possibility we might expect a retracement to have a T plus 2 negative that will close the T plus 5. So the first checkpoint in case from this candle we will start falling is the target at $854.16, and subsequently we have another target here at $848. If we start seeing a minor retracement and then return to the tops, then we will have time to close the T plus 5, even because the T plus 5 can last until 338 days. So we have time eventually to close the downward cycle up to February 2025. Okay, so that's the situation at the moment. This T plus 4 has reached 107 days, so we still have time also to close this T plus 4 with minor retracement. But the tendency is definitely to the upside. And here we can also update the chart by having the T plus 1 upward cycle. So let's move to the next one, which is Blackstone. On Blackstone, we have pretty much the same situation as for BlackRock. So here we have, as for BlackRock, a T plus 5 that was broken to the upside with this candle on the 16th of July 2024. Therefore, here we have a T plus 5 that is bounded to the upside. So the reversal cycle will push the price further to the upside until a minimum duration of 190 days, which is in this case can last at least until the 19th of December 2024 at least. Otherwise, we can go beyond the 2025, even to H1 2025. Also here we have a T plus 3 potentially a T plus 3 that has reached a duration of 35 days. So now here, be careful because we might expect a bit of retracement to begin a T plus 2 upward cycle. And the checkpoint will be to go in case they want to start the retracement. The first target would be to go below $152.69. We have had the first T plus 1 event here, T plus 1 upward cycle. And now we might expect a retracement. So this retracement might happen today or by end of next week. But the situation as for BlackRock is to continue to the upside as a midterm trend. Regarding the days elapsed from the T plus 5 downward cycle is 225, so basically almost the same as BlackRock. So here we have still time to push the price further to the upside and then close the T plus 5. But we are already in more than a minimum duration, so eventually the funds or the high frequency trading machines or algos, they have already time if they want to retrace a little bit more, close a T plus 2 to turn a T plus 2 into a negative one, and then start a new T plus 5. So let's move now to the next one, which is JP Morgan. On JP Morgan, we have a chart setup that looks different compared to BlackRock and Blackstone. So we issued an analysis in which we were expecting first a prosecution of the uptrend because we broke up this 6 months upward cycle to the upside. Therefore, time for the rally was or is between 94 bars, so 12th of August, up to 168 bars, so up to the 25th of November 2024. But we were also expecting a retracement in order to close the first T plus 3 of this T plus 4. And this is exactly what happened. So we closed, in this case was a T plus 2, and then retracement to close T plus 3 downward cycle. So analysis correct, and such arrows, I leave it on purpose, and you can always check in the last analysis that we issued what we were saying. In order to be really transparent with you, with our followers, and give an understanding of why we were expecting a retracement beyond the earnings. Okay, so now the situation here is that if we gauge the total duration of this T plus 5 yearly upward cycle, we come to the conclusion that on the 30th of August 2024, we had 274 bars. So here, the time for keeping the rally to the upside is definitely lower compared to BlackRock and Blackstone. And here we have already an upward cycle that is at least a T plus 1 or even a T plus 2. And if we gauge the total duration from this T plus 4 to here, we have 112 bars. So 112 bars is encompassed in a duration of a T plus 4. So here potentially we have closed a T plus 4, and now we are seeing a development of a new upward cycle that can be a T plus 4 or even a T plus 5. And if we have a T plus 5, we cannot go back to this top before at least 48 bars, which means that we cannot go back to the tops, so we cannot proceed and extend the rally before the 7th of November 2024. At least, because generally the yearly upward cycle tend to turn into positive in really best case scenario after 70 or 80 days. So, and it's not even by fact that the new potential T+5 upward cycle will turn into positive really soon, but it might also definitely extend the downtrend, also because we can close a T+5 downward cycle, which it's true we have 225 bars, so we have still time to do whatever they want. But if here we have a T+5, then we have also the possibility eventually to close the T+5 downward cycle. So how to understand in which situation we are? Well, first of all, we have to closely monitor this low at $200.61. And if we go below this $200.61, then another checkpoint will be $190.90. And of course, before arriving into this area, we have to deal with the moving average 200 period. But if the price will go further down to $100.61, we will have another sign of weakness, and therefore here we might expect a T+4 or a T+5. So therefore here on JP Morgan we have not a bullish scenario but a neutral scenario, because the time here is running out for proceeding the rally. The earnings will be a triggering point, and let's see if the earnings will be in, yeah, so the earnings will happen still within a duration of yearly upward cycle. So with the earnings we can still go to the upside, but we will have to also gauge the total duration eventually of this cycle if the earnings will push further the price back to the absolute tops and make some other let's say thinking. But be careful with this $200.61. This is really important, really important. On top, here we have reached 13 days, so we are about to close what, a T+1. But then after a T+1, we can expect also the beginning of another T+1, okay? So push to the downside. So be careful on JP Morgan, because we have a neutral scenario and not a bullish scenario like BlackRock and Blackstone. So let's move to the next one. The Banks of America's chart setup is suggesting us a situation of this kind. So first of all, from this top that was made on the 17th of July 2024, we have had a strong downtrend, which lasted not so long. It lasted 13 days, in which the price lost 20%, and we had a solid bounce touching the moving average 200 period to the upside. So from this top, we potentially have a T+5 upward cycle. So here we have to be aware that wider cycle or a large cycle is in development, and thanks to this low and to this candle, we closed also the first T+3 downward cycle of this T+4. So we have had from the 27th of October 2023, the first downward 3-month cycle, the second downward 3-month cycle, and the sum is a T+4. Then we have we are on the second T+4 with this first T+2, and now here we are basically closing at more than 70 bar this T+3. Therefore, here we are potentially on this second T+3 of this second T+4. We have also the concrete possibility to close this T+2 at 25 bars. And basically here we have already all the condition for this low to sign in as a T+2. And what is interesting to note is that here with this stop, we have the closing of a T+2, and now here we have another cycle in development that, thanks to the yesterday's candle, broke up its top, and therefore here we have a T+1 or even a T+2 that is binded to the upside, and this uptrend can last if we are talking about a T+2 until at least 24 days, until 7th of October 2024. So here we have the concrete possibility for Bank of America to extend the rally until at least the 4th of October 2024. If we have more a conservative vision, um, considering this new cycle not as a T+2 but a T+1, because here we have not so many candles below this top, even if the minimum candles are there for having a T+2, but a T+1, the T+1 can last minimum of 13 days, so we can extend the rally until Monday, 23rd September 2024, at least. So for the beginning of the next week, we might see some little retracements, but the short-term guidance is to continue to run to the upside, and critical targets are the following. So the target of 61% retracement Fibonacci has been reached. So therefore, $42.09 is the next price level to keep it monitor for take profit eventually. Okay, so here we have this situation on Bank of America, but still here potentially a T+5 upward cycle in development. So we cannot really go back to the tops for 48 days, even if we averaged 45 days. So we cannot go straight back to the tops for this the next 3 days, but still here we have a condition in which the price can keep going up and rally, reaching the first target price of $42.08. So let's see if during the next weeks we can also reach this top. Okay, so that's the situation of Bank of America, and let's move to the next one. On Goldman Sachs, we have a situation in which the setups of the chart suggest the following. So from this top occurred on the 31st of July 2024, it's possible to define potentially a T+5 upward cycle, even if we don't have right now the minimum days to prove that this is effectively a T+5. Therefore, here we have the question mark. For sure, it's already a T+4, but not yet a T+5, because we need 48 days at least below the top at $514.22. So considering now the duration, which has reached 36 days, we potentially are about to close a T+2. So we have other 8 days eventually to complete the development of this upward cycle. But after 8 days, we will be in the maximum duration rate, in which at the end we will expect, or we are already expecting basically, a new T+2 upward cycle. Therefore, you need to be careful now that time is running out for a retracement to begin a T+2 upward cycle, and then eventually to return back to the tops. If this top will be broken up, then we will have the continuation of the uptrend for more days. We will have to gauge when the top eventually will be broken to make further considerations. The situation of Goldman Sachs is pretty similar to those that we have already seen on Blackstone and BlackRock. Here we have the duration of this downward yearly cycle, 218 days, divided in the first T+4 downward cycle and the second T+3 downward cycle. We have already closed the first T+3 3-month cycle, and we are on the second T+3. And here we have closed the T+2. So the situation now on Goldman Sachs is neutral, because if we want to have a proof to continue the rally to the uptrend, we have to go over $514.22. Another checkpoint in case of harsh retracement would be the low at $457.48. We are about now to close another T+1 14 days. So the first checkpoint over the short term is not this top, but is this top at $511.19. Okay, but still we have 8 days eventually to continue to the uptrend versus 36 days to have a retracement for a T+2 upward cycle. So basically, here we have less than 20%, roughly 20% to continue the uptrend on the short term, and 80% possibilities to start a downtrend or a minor retracement. Eventually, so in case of retracement, the Fibonacci levels would be $495 and 400 480 400 see that would be 484. Okay, 484 if 497s are the two target for the downtrend. So let's move to the next one, and then we can close the video analysis. Last but not least, we conclude this episode with Citigroup. So here we have a situation which is similar to Bank of America and a little bit more understandable, because yesterday's candle broke up this high at $62.70. And if we gauge the total duration from this high of the 16th of July, where potentially we have a T+5 upward cycle in development, here we have 32 bars. If we gauge now the total duration, still from this T+5, here we have 46 bar, which is over the maximum duration of a monthly cycle. Therefore, with this candle, we broke up this high, which is basically a T+2. And here we have a cycle that is binded to the upside. And here it's even more clear compared to Bank of America, because we have 12 bars, but basically this downtrend was deepened. and we touched for the second time the moving average 200 period. So here we have the possibility to proceed further to the to the uptrend for at least 24 bars, which means that the price can rise up at least until the 3rd of October 2024, if not beyond. So a T plus 5 that has had downtrend of roughly 20%, now is in recovering phase, and if we will and now we have already the minimum duration below below the tops to say that this is a T plus 5, because here we have 46 bar, we still need 3 bars, but unless we go here in 3 days, here we have a T plus 5. And with this upward cycle that is already binded to the upside, then we can return back to the upside here at $67.16 for within the next month at least. So that's the situation we have of Citigroup, pretty similar to Bank of America. If we gauge the total duration here from the top to the other top T plus 5, we have add 364 bars. So here we add 327 plus a Bayes-Tongue of 3 degrees less. So this was a T plus 2 Bayes-Tongue upward cycle between T plus 5 and another T plus 5. Now here we are pushing the price. We have pushed the price back to the downside, but here we are recovering. And the first target price is 65.60 and followed by 67.16. So last but not least, here regarding the downward cycles, we have to reach 192 days. At the moment here, we have a T plus 3, even if 192 days, it's the minimum duration, even for a T plus 5. So here, we might also have the possibility to develop not just a T plus 3, but something that is even wider. If here we have a T plus 5, definitely the $67.16 will be the natural target. So I hope these analyses have given you a lot of insights. So thanks for watching, and if you wanted to be notified about our latest video, subscribe to our channel. Thank you, and see you to the next episode.